Sunil, hi, good morning. We've been cribbing about the fact that, no rate cut news from China has sort of failed to lift Indian equities. Do you sense that Indian equities perhaps are completely working on a different dynamics right now?
So look, I think, if we go back a short while ago when we had panic in emerging markets, I think we got to extremely oversold levels across pretty much every major market in the world. I think the one market that did hold up rather well was India, and I think India had proven to be rather defensive. So I think, if we do get some more risk appetite coming in, then I think probably short-term India consolidates. I think as the previous speaker was indicating, but I think if you look at the China rate cuts, I think a lot of that is to neutralize some of the intervention that's been happening in the FX markets as well. So I think the question is how much of this is a stimulus to boost growth uh, uh, as opposed to stabilizing the conditions. And our view is that the China rate cuts, reserve requirement cuts are much more in the latter category of trying to stabilize the domestic economy rather than necessarily providing a stimulus boost. So to that extent, I think clearly the market's been fairly lukewarm and lackluster reaction to the China rate cuts, both within China and outside China as well. So I don't think India is an exception, particularly on that front.
Uh, a lot is being spoken about how central bank action generally is just failing to cheer markets at large as well. I mean, Aisha was making that point about how India is standing out, but the rest of the globe also is not giving an extended cheer to what presumably could be a gush of liquidity coming in for equity markets or riskier assets. Why is that happening, Sunil?
Look, I think, if we again go back to the period in September when there was concerns and panic around the Fed rate action, I think that's still out there. I think, our house view is that we'll get a Fed rate hike in December. So I think the largest economy is still going to move towards a gradual normalization of interest rate path. But I think if you also balance that with the concerns that were central to emerging markets, particularly, was a lack of growth and leverage. That hasn't necessarily gone away. So, yes, we've had a little bit more accommodation from central banks. Yes, we've had markets no longer as oversold and the panic's ebbed. But are the concerns on growth still very much there? Are the concerns on leverage still very much there? And they are.
So what
So I
happens
guess,
to...
I mean, if I can,
Yeah, go ahead.
sorry, go ahead, please. Yeah, I mean, look, at the end of the day, there is a broad concern over a slowing in the growth momentum. And so if you can find companies with the ability to deliver growth, I think those are the ones which market's likely to reward. But I think the broader growth concerns are still very much there. Sorry, please go ahead.
It's a little tricky then, Sunil. What to your mind is going to outperform right now? And do you sense it may be US, because it seems like now with the China rate action, US Fed hike is at least a no-go this year?
Look, I think first of all, our view still very much is that the Fed will hike in December, although, it's probably a December move rather than a this week move. It's going to be interesting to see what the signaling is like. And there's been some mixed signaling through various parts of the Fed ahead of even this week's meeting. But yes, I think the Fed's probably going to leave the door open for a possible hike in December. As I said, that's our house call. We think there's a gradual normalization path after that rather than big step movements. But the fact also remains that as markets go, the US has probably been trading the best amongst global markets. The US is very much close to its all-time high of 2134. That's on the S&P, and I think there is, if there is any one market that has the probability to clear that, it's the U.S. So yes, I think that is a market where there's clearly some flight to safety. I go back to pockets of emerging markets where I think there are growth opportunities and outperformance opportunities. We like Korea. I think Korea has seen a fairly range-bound and a very large underperformance if we take the last couple of years. And I think Korea has got strong valuation support, some policy support. So there are pockets of outperformance that are building up even in the short term in emerging markets.
Fair call, Sunil. We'll leave it at that. Thanks so much for taking the time out and joining us this morning and giving us your base view.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.